This tax tip is for people who are paying for higher education. You can take one of 3 possible tax breaks. 2 of them are good. The 3rd one you should just forget about. Before I list them, I have a couple of general points. You qualify for education tax breaks if you're paying to educate yourself, your spouse, or a dependent, such as a child. The school can be public, private, for-profit, online. It doesn't matter as long as it's accredited. The tax break applies to the cost of tuition and fees, but not to room and board. And there are income limits to qualify. Most taxpayers will pass, but not everyone. So, here's my guide. First, for a student who is studying for a degree or a certificate at least half-time, what you'd call the normal going to college, here's where you'd use the American Opportunity Credit. It's good for the first 4 years of higher education. For every student in your family, you can write off up to 100% of the first $2,000 in expenses and 25% of the next $2,000. That is $2,500 per person. This tax credit covers course-related books and equipment as well as tuition and fees. Now, if someone else helped you pay for tuition, say a grandparent, you still get the tax credit as long as the student is your tax dependent. There is an income limit on this tax break. Singles and heads of households get the full credit on adjusted incomes up to $80,000. The credit goes down as income rises and phases out at $90,000. Married couples filing jointly get the full credit on incomes up to $160,000, phasing out at $180,000. The second possible good tax credit is for graduate students, 5th-year students, or people who are taking only a course or 2 for pleasure. It's called the Lifetime Learning Credit. With this credit, you can write off 20% of up to $10,000 in tuition and fees for a maximum credit of $2,000. Please note that that's $2,000 total, no matter how many students in your family are studying this way. The credit includes the cost of courses taken to improve your job skills, so it's good for people who are training for something new. The income limits are the same as those for the American Opportunity Credit. I've put them back up here so that you can look at them quickly. Finally, for the useless tax break, there is a tax deduction for tuition and fees. It's either $4,000 or $2,000 depending on your income. Now, at first look, a $4,000 write-off might sound great, but tax deductions are not worth nearly as much as tax credits. A credit reduces your taxes dollar for dollar. The American Opportunity Credit saves you $2,500 right off the top. Deductions simply reduce your taxable income. A $4,000 deduction in the 15% bracket would save you just $600 in tax. Now, I'm sorry for all these numbers, but I wanted to make the point. Tax credits are almost always better than deductions. Now, the school will have sent you a Form T-1098 telling you how much you paid in qualified tuition and fees. So don't forget to use it when you're filling in your tax return. I'm Jane Bryant Quinn for dimespring.com and The Street.